Welcome to Taxed and Confused, the podcast where tax administration meets real talk. We're your hosts, Lizzie and Lisa, two tax nerds on a mission to decode the rules, demystify the system, and maybe even make you laugh along the way. From tax returns to objections and everything in between, we're diving into the world where the burden of proof is on you, not the ATO. That's right, this isn't criminal law. In tax, you're guilty until proven compliant. But just a quick heads up, this podcast is for educational purposes only. It's not tax advice, and it's definitely not a substitute for professional guidance tailored to your situation. So brace for your bureaucracy and join us as we explore the weird, the wonky, and the wildly important world of tax admin. Because when it comes to tax, we're all a little taxed and confused. So, Lisa, in this episode, we are exploring what general and shortfall interest charges are and when they arise. So let's get started. What exactly are we talking about here?
We are talking about taxpayers who do not pay their tax bill when it's due, probably is the best way to describe it, Lizzie, isn't it?
Yep,
so we've got general interest, general interest charge and shortfall interest charge. A bit different, but yep, that's where it is.
So when you don't pay enough tax that you should, so you've got an assessment that's been issued to say you've got to pay $1,000 and you don't pay that by the due date, then you are going to be subject to general interest charge. It's a little bit different when it's shortfall interest charge, though. When does that get triggered?
Yeah, so you've got to understand what a shortfall is. Okay, so you go, well, GI, general interest charge, that's on all debts, right? All debts that are not paid when it's due. Doesn't matter whether it's GST, super, you name it. It's all just adds up. With shortfall interest charge, you've got to think, is there a shortfall? So in our previous episode, when we were talking about deferrals and amended assessments and those sort of things, we've got to go back and think about those. So you go, okay, you've had an amended or a default assessment done, which has involved the taxpayer paying more tax, right? So therefore there's a shortfall payable. And that goes back to when the original tax debt was on foot. So there's that time frame. So that one can get a little bit ugly because you're going back, if say it's for, fraud, corruption, you name it, and they've gone back 10 years, you imagine the SIC is on the date that assessment was due, and what the difference is, you're going to pay interest on that, and then it's just going to roll forward. So in effect, you could have GIC on your SIC. Does that does that follow? Does that make sense enough for everyone?
Yeah, it does. It sounds like a nightmare. And it does turn out to be a nightmare for many taxpayers who, through this process, end up having quite a massive tax bill, even though their underlying tax that was essentially due to the commissioner may have been, not too significant, but left unattended, left to accrue interest over many, many days, many, many years.
And compounding. We all love compounding, but so does the ATO. Compounding can really kill you. And that's what a lot of clients look at, or taxpayers look at, when something like that happens. And it always compounds a lot when it's, retrospective and audit or whatever, that the tax debt that gets incurred by the taxpayer is sometimes very small compared to the penalties and interest charge on top of it, or it can be at least the same amount, and everyone goes, whoa, how does that work?
Yeah. And what about the rates roughly at the moment? They are adjusted each quarter, I should say. And so around now, what do they look like? Do you know off the top of your head?
So it's based on the bank bill rate, I think, is officially what it's called, right? Because remember, the ATO isn't a bank. So it's not like one of the banks and they issue, this is what, my deposit rate is, this is what my mortgage lending rate or anything like that. The ATO go, here's the rate. And then there's a penalty on top of it. So for GIC, it's roughly 11 or so, right? And for SIC, it's less than that. right? It doesn't uplift for as many basis points
Yeah, I think
as
it's about
so.
close to 7%, I
Yeah,
think, for
correct. Yeah, it's a
SIC.
four. It's a four. Yeah, so the uplift isn't as great. So it's a 7-point uplift or 70-point uplift for GIC and a 30 or 40% uplift. It must be a 30% uplift for SIC. So it uplifts. So if you think about it, you'd probably get a better interest rate for going to the bank and asking for it.
Well,
But it's not as bad
yeah.
but it's not as bad as credit card if you don't pay
Yeah,
your credit card. But it's somewhere in between.
As you say, it's not a bank. The ATO is not a bank. It's not there to be acting like a bank. And so why does the ATO charge interest in the first place then? What's the impetus for the ATO imposing this on taxpayers who don't pay their tax on time or ultimately have a shortfall?
They're allowed to, aren't they? They're allowed to. And that's what it is. It's basically saying you can't use the ATO as a bank, right? That debt has an imputed interest rate in it that you have to pay. It's as simple as that.
Yeah.
But, you can request for them to ignore it and remit it. But all in all, they do charge it. Now, the interesting quirk of the system is if the interest incurred is less than $100 in the month, they'll automatically remit it, which is quite nice.
Go. Yeah.
Okay, so my rule of thumb for clients is if you've got about $10,000 there, you probably won't pay any interest on it. But of course, the ATO can still ask and collect the debt on it, can issue you a garnishee notice, can issue you a director penalty notice if you're a company director and all that sort of stuff. So you can't just leave it there. But if you put it on a payment plan, say, and it's under $10,000, there'll be no interest. It'll automatically get remitted. So you can work the system, but you've got to engage with the system, Lizzie, to make sure that it works properly.
Because ultimately they want to be right, like they're wanting to encourage tax compliance. It's about part of that process, part of that tax administration process is timely payment of the tax due. So the system is set up to essentially encourage that timely payment and discourage late payment. And that's ultimately also, to create a even playing field so that those that are doing the right thing, that are submitting on time and complying with all those kind of steps, that they don't get a rougher deal in the scheme of things as well.
Exactly. And that's, there's another penalty that sort of gets lumped in with this, which is failure to lodge penalty as well. Right. So when you're talking about complying, having good tax hygiene, being a good tax citizen, this all comes into play. And if you can show good compliance with the tax system and you engage early, if something unfortunately does go wrong, the ATO will look at your history and go, well, you're trying to do the right thing. We'll apply any liberties that we can do to make sure that, you're not going to be have an adverse outcome if something does go wrong. So failure to lodge penalties as well. So you've got to lodge on time. Right. And if you lodge late, there's different penalty units, and it's the same penalty unit for all of government as well. But that sort of comes into play with it all. So usually when you find someone has got general interest charge on their account, there's a good chance that they're not doing the right thing in other areas, and there could be a failure to lodge and all these sort of things as well. But all of these penalties is a bit of a stick to encourage good tax compliance, full stop. It's not just lodging your return, it's also paying your debt when and as it falls due.
Yeah. And there's an extra, just stepping aside a little bit from the GIC and SIC, there's also the penalties on top of that, ranging from failure to take reasonable care, recklessness, intentional disregard of the law, and these can range from 25% to 75% of that shortfall. So that's quite an additional burden imposed when you're not doing the right thing, and that the ATO may adjust that down or up depending on whether the taxpayer is hindering the ATO in doing the job, if they're a repeat offender, so that hygiene factor there, or it could be for the better if you actually are voluntarily disclosing or amending because you've been upfront about an error going through that's led to a shortfall. So that behavior and that determination of whether whether or not you've tried to do the right thing, or have you been indifferent to the risk of doing the wrong thing, or deliberately ignored your obligations. The level of penalty here can also shift the game a little bit and create even further burden to taxpayers in this space as well.
That's exactly right, Lizzie. So you've got the shortfall on the tax, but then if you've done it recklessly or whatever, there'll be a uplift of that. And then on top of that, you'll have your SIC for backdated from when the debt was on foot. And then on top of that, you'll have your general interest charge after that. So it's amazing how all these numbers start compounding and all that sort of thing as well.
It's like a domino effect.
Exactly. So, the take-home message for all the listeners is just make sure you keep yourself as compliant as possible. Okay. And it's quite interesting as well, because if you lodge late and you're in a tax refund position, so you're an individual in a tax refund position, usually that's okay. But if you're in a tax deficit position where you have to pay, that's when all the charges go on, right? But also there's another, we're talking about bad things. Let's talk about good things as well. For income tax debt, so we're not talking about pay-as-you-go withholding that needs to be paid by businesses or GST. For income tax debt, if you pay early, the ATO actually give you interest as well at the same rate. Right? But of course, you've got to pay tax on that because it's assessable income as interest income, right? So it's quite interesting how that works. Okay, because myself being a tax agent, I've got to keep everything squeaky clean, because yearly I have to make a disclosure to the Tax Practitioners Board that monitors and regulates myself as a tax practitioner. I can't have any late lodgements. I've got to have all payments made on time and all that sort of thing. And I make an annual disclosure saying I'm a fit and proper person. I've got all my tax obligations online. So what happens when I do my tax return, I just pay it straight away. Right. As soon as I get my notice of assessment, even though you've usually got some time to pay it, I just pay it straight away to go, I've just got to get it off my plate. I don't want to forget it, because otherwise it puts my whole, livelihood and, my occupation profession into jeopardy. So, and that's what I notice. I go, that's nice. I get a little bit of little bit of money from the ATO saying thank you very much into my bank account when it all comes due. And I go, thank you, ATO, that's nice. And then when I go to do my tax return, of course, it comes through on my pre-fill, and I'm going, yeah, I'm paying tax on that as well. But hey, as we know, if you pay tax, it's a nice problem to have, because it means you've earned some money.
That's it. So if we move to the situation where we have incurred GIC or SIC, we've already raised the point that we can seek the ATO to remit that. So the process has recently changed regarding how we do that, and that follows a 2025 review by Ruth Owen, the tax ombudsman, looking into the complaints that they've received regarding the ATO decisions not to remit when those applications come through. Can you talk a little bit to the issues around remission?
Yeah, so what happened was all of us tax agents, Ruth has been doing a brilliant job listening to us all, and we go, it's really inconsistent, Ruth. Husband and wife, and I've heard this story from a number of different practitioners. Husband and wife, exactly the same tax profile. One gets it, one doesn't. Right? So what's happened now? We used to call the ATO and request it on the phone, and it doesn't matter how much it was, we still request it. They've just changed the system now to make it all through Practice Mail, which is through the online system for tax agents, so the portal as we call it. So we now request it. And instead of just saying, hey, there's been a fire and they couldn't lodge it, or they've, had a disaster and their house is flooded, or they've been in hospital, or whatever, any reason for saying that they couldn't pay their tax bill on time. Now there's a form that you need to fill in, and there's a separate form for whether it's general interest charge or shortfall interest charge, and there's failure to lodge as well, to request all those penalties. And you send it in through practice mail, and it then gets assessed by the ATO officer. Now, the good thing about this is that each one of those 3 forms, you follow a PSLA, a practice statement. Now, what that practice statement is, and we've talked about this in previous episodes, is that's the rules the ATO officers need to look at when they're assessing a request. So it's, even though we can read it and we can see it because it's all in the public domain, it's the reasons that is acceptable to remit any of those charges. And that's what applies. So you've got to look at, for GIC is different to SIC because the way the debt came on foot is so different.
Yeah.
So there's different reasons.
So for like the general interest charge, the more likely reasons that the ATO might accept are things like impacted by natural disasters, which around Australia at the start of 2026, we've seen fires, we've seen floods, a lot of challenges. So those instances may trigger a reasonably likelihood of being successful here. Otherwise, there could be sudden ill health. There could be theft or damage of property that's critical. It could be vulnerabilities, so domestic violence, etc. Those kind of more difficult and challenging topics there, as well as possibly bereavement. But there's less likely success in other areas like adverse business conditions affecting cash flow, general economic downturn, fluctuations in the currency or exchange rates, the general business risks, using money to do business expansion versus paying your tax obligations, or even being on holiday at the time of lodgement. So those are the items that the ATO lists there and stem from that PSLA, and we'll provide the link in the show notes to those. So there's a lot of different reasons that are more likely to get that success, but ultimately it comes down to the individual submitting that remission form. If it's the tax practitioner, that's through that portal function, although the lawyers who don't have access to that portal still have to do the more traditional mechanisms as well.
They still have to use faxes, Lizzie. That they always complain about it. They don't have. So just so everyone's clear, a tax agent, being an accountant or a special subset of accountant regulated by the Tax Practitioners Board, have access to the portal, so we can see everything inside the ATO. A tax lawyer doesn't have access to it because they can't lodge tax returns, and so they have to go by normal means, which is, a lot of times they still get annoyed that they still have to fax things in. And that's the way that it works. But the one thing that really came through with the new guidance on this is the nexus with the debt and the event. It's got to be close. There's got to be close proximity for it. It can't be, I was in hospital 6 months ago, right? It's got to be a reason for it. And they also look, as I said before, they also look at good tax compliance history. If it's just a one-off, you're more likely to get it. But if a taxpayer's been habitually late, they're going to go, no, I don't think so here.
Yeah, it goes back to that, so often in our conversations, it goes back to just trying to do the right thing, doing things on time, not avoiding and, shoving it under the rug for later to deal with. It's really, really important. Yeah. So you, when someone submits that form, the ATO makes a decision, doesn't mean you'll necessarily get the decision you're happy with. So your options there are to either determine whether you've missed any information or look to whether you can submit a new request, or otherwise you might have to seek a judicial review from the federal court if you want to really go down and debate that pathway. So for SIC, as Lisa's already flagged, they're looking at prior history, reasons that led to the imposition, how the ATO became aware of it, what control did the taxpayer have. There's a little bit more options though if the taxpayer isn't happy with the outcome of the decision there. Depending on the circumstances, it can be objected to, or you can seek a review by the ART or through the judicial review with the federal court. So there's a little bit of pathways there, but it's not quite as clear and neat as what you may initially have thought. Did you want to?
So the big thing with the SIC, because it's the shortfall, you've got to. I think the main criteria there when you read through and read between the lines is how come there's a shortfall, who identified the shortfall, and how quickly was it rectified. Okay, because remember what we're talking about here is we the taxpayers are allowed to amend the tax return. If we amended it and caused a shortfall, probably likely because we've volunteered and we've amended it to pay more tax because there's a shortfall, you're probably more likely to get remittance. But if it's been a long drawn out process of an audit and a review and all those sort of things that take a long time, then maybe you won't get the benefit of the doubt with it all. And the interesting thing I found out, because I'm one of these tax nerds, if you said, is I was watching Senate estimates yesterday, and I picked up on something very, very interesting. So the ATO go to Senate estimates, and we might do a whole thing about what Senate estimates is and another thing, but I love Senate estimates because it's when the senators quiz the various government departments. So the TPB goes up, the Tax Practitioners Board goes up, the ATO goes up and everything like that. And the senators asked about general interest charge. And I'm going, great, they must have talked to Ruth Owen and they must know about the report and all this sort of, someone's got in their little ear to ask this question. And they said that they didn't say they'd changed the system, which we know about. They've changed the mechanism of doing it. But what they did is they've said they've changed the ATO personnel, because the ATO run with a lot of contractors. And there was always an issue about how good are the contractors because, you know, they might not know a lot of tax and things like that. So there was always an issue. How many contractors do the ATO have? And, you know, with all the outsourcing and the consultancy and all those issues that have come through. So what they said was previously the decision on the ATO officer that makes the decision on remitting of the GIC was through the contractors area. And what they said is they've flicked that to now the decision is going to ATO staff members.
Okay.
Now, so I thought that was interesting because the question was, the line of questioning by the senators was, you know, how's your outsourcing going? You're still using a lot of contractors, that sort of way. And it sort of developed into this line of questioning. So what's happening now is we're going to send it in to the portal. They're going to read the form. The person that's reading that form will be part of a department that does it, that is full-time ATO, or I shouldn't say full-time because they could be part-time, but permanent ATO personnel, not being used with Serco or one of the contracting organisation that contract into the ATO. So that was good to know. So we're trying to get more consistency.
Yeah,
and that's what we were after, because it's very hard for a tax agent like myself to explain to a husband and wife, well, one got it and one didn't, what's going on here? If they both got it, happy days. If they both didn't get it, well, they won't be happy, but at least they're consistently unhappy.
Yeah. So these reforms or these changes in process that the ATO are adopting might not actually lead to more people getting their GIC or such remitted, but at least there will be a clearer, consistent, and therefore, in effect, fairer system, and hopefully smoother sailing there. So just moving on to before we wrap up, a quick kind of just check in about the deductibility for tax purposes. So previously, for income tax purposes, GIC and SIC were both deductible, but we just want to flag that the law was changed in 2025, and those are actually no longer deductible. So that also creates part of the story here about really the objectives around why the ATO impose interest to ensure timely payment, not to have to be strategic in using them as a bank to make sure that there's no unfair advantage, etc. So we've got to be mindful there. And that's particularly relevant if a taxpayer is going through the courts and or going through objection processes. A decision has to be made throughout that process. Do they pay the tax debt that's under dispute through that process or not through that process until the outcome is made? So a little bit there. Did you want to add anything quickly on that note?
Yeah, exactly. So it was a specific provision that allowed a deductibility for the general interest charge, the shortfall interest charge. Okay, so they've actually removed that from the legislation. Okay, so that's been rescinded from the legislation, been removed. But if you're in business and you want to pay your tax debt and you can get a loan from someone that pays interest, then that would be deductible under the general deductible provisions, which is the way that it works. So there's those two things just to be aware of with general interest charge and shortfall interest charge. Now, if, as you said, if something's going through the courts, if it's a small business entity, there are some provisions that can put everything on hold while, all the debt and everything on hold while it's getting disputed. And then depending on the outcome of the dispute, it will then re-trigger payment or non-payment with that. But there's some various amnesty provisions, if I can call it that, to protect the judicial system or the small business taxpayers from going through the judicial system to help them with that.
So that's really interesting to note. So we better wrap up this episode. So is there any takeaway message then you'd like to finish on?
I think the main takeaway message, Lizzie, as always, is lodge on time and pay on time. And I think because you never know when your situation can change and you need to ask, throw yourself at the mercy of the ATO. You're much better off doing that if you've got good tax hygiene and doing everything right. And that's the main thing. I know this is for learning purposes and things like that, but also we're all taxpayers. So let's just take some take-home messages that way.
That's it. And my part would be don't ignore things, because the tax debt may not be substantial, but boy, it can get substantial once you add on all those interest charges and potentially penalties. So don't ignore the obligation. So with that, that's it for this episode of Taxed and Confused, where the rules are rigid, the paperwork is endless, and the burden of proof is all yours. If you enjoyed today's deep dive into tax admin, don't forget to subscribe, leave a comment, and share it with someone who's just as confused as we are. And remember, this podcast is for education and entertainment purposes only. It's not tax advice, and we're not your tax agents. Thanks for listening, and until next time, stay curious, stay compliant, and stay just a little bit taxed and confused.